Hello and welcome to India Market Open. It's finally Friday and the much anticipated RBI policy meet is behind us. Good morning, Niraj. Good morning, Tamanna. I think the focus will be back on global cues and earnings. And from the look of it, the markets were disappointed by the RBI's commentary yesterday.
Yeah, maybe position exactly on the other side, didn't quite get what they wanted, and a bit of a pullback, but let's see.
Maybe and all this on expected lines. I don't think expectations were running high, but the
I think
positioning,
a little more in terms of expectations, perhaps on easing the liquidity situation. RBI chose to do nothing much at all right now.
Yeah, but I think for the market's perspective, maybe the change of stance not coming in, largely the principal disappointment. So because the positioning on the banks was largely for that, and that didn't happen.
And also very quickly on liquidity, he did say that they're nimble enough and they've been managing liquidity. So, and liquidity, for whatever it's worth, hasn't been as tight. It was consciously kept tight to play out the pseudo rate hike that they were holding repo at. So, no, I think it was hawkish or remained hawkish, let's put it like that. But the markets, except for PSU banks, seem to be disappointed. But
PSU banks have a life and a story of
their own.
But globally, things are looking good if you're looking at the parameter of what the US economy is like. It's a hot streak, and that continues. That reflected overnight in the markets as well. The S&P 500 touched the record level of 5,000 for the first time. It receded a tad, though, and ended up closing a little under 5,000, up to 3 points. But things are working for that market and for that economy. They're looking, all three indices, the Nasdaq, Dow and S&P 500, are looking to close a fifth consecutive week upwards. So that has definitely been a good run for them. And the reasons are pretty clear. If I look at the S&P 500, 80% of the companies listed there have actually beaten estimates on their quarterly numbers. On the other hand, the economy, as the jobs data or the jobless data told us, is looking fairly good. There was a sharp fall in weekly jobless claims, and that's moved the 10-year higher by about 22 bips, if I'm not mistaken, to about 4.15%. Brent is the other one. Crude is hurting a bit. It's receded from its high levels, but overnight Brent was up 3%. Before recovering, because the Middle East crisis is not going anywhere. A fresh US drone strike. They've taken out one of the leaders of the proxy terrorist groups, and no real solution to the Israel-Gaza conflict right now. On the Asian market side, not too much action today. Quite a few of those markets are shut because of the Lunar New Year calendar. So maybe not too many cues from Asia, but overall, nothing to worry about on the global cues perspective. The question is that what is the trajectory Indian markets will follow? And Niraj, my guess is that till there is a very clear positive outlook, or unless it's very stock specific or sector specific, we're not going to see too much of movement.
Yeah, very likely so, Tamanna. Very aptly put as well. But the other aspect is also that somehow everybody is now waiting for the correction to happen. Usually markets don't do what everybody anticipates it to do. I read some 5 notes yesterday on the technical parameters, right? I don't follow technicals as well, so I can't distinguish what is a right one from the wrong one. But most of the notes seem to suggest that the 21,500 is the make or break zone. Usually that doesn't happen that way. So watch out for 21,500, because due credit to the technical guys, they know their stuff, and they are saying that 21,500 is the make or break support zone. If it breaks, then there are certain downsides. But somehow, I don't know, just something tells you that the skepticism is overdone. Much as people are talking about how the markets may fall, etc., you see the bulk deals that are happening. You see people putting money in the preferential allotments. Thick and fast, and this is smart money who kind of knows one from the other. So that
I should give you credit, because I've been thinking, and of course we've talked about how a lot of the bigger ultra HNI money has been sitting on the sidelines waiting for a correction, and we talked about this in November, where you were pretty clear about the fact that this is going to be a one-way move, and we've got that. So what markets expect versus what happens are really almost opposites, or corollaries of sorts.
Yeah, and just one statistic here before we talk about specific stocks or other things. I picked up from the DSP mutual fund note. They have done this thing on mid caps, small caps, etc. And for the long-term investor in mid caps or small caps, look at the statistic. On a 7-year rolling basis, since September 2012, by the way, the mid cap index has returned 12% returns, 76% of the time on the rolling basis. And on a 7-year rolling basis again, negative returns Never.
Oh.
So look at it that, people talk about how you want to invest in mid caps and small caps in funds, etc., invest for the long term. If you have a 7-year time horizon, in the last 12-year history, which is a long enough history, you've not gotten negative rolling returns at all.
On mid-cap and small
On
cap.
mid-caps and small
Wow.
caps. So as much as it's maligned...
What is the range of returns that you've got?
12%, 76%. See, Samina,
I
for
mean, that's
mutual
the
fund...
cargo on the index.
Yeah, so as long as you're getting... So the idea of investing into markets is what? Per se. That you invest into markets from a perspective of beating better than FD returns, benchmark, etc., as the case may be. The worst is this thing, that 12% returns at least 76% of the times, which to my mind, in a period of time when the mid caps and small caps, at least until 2019, were not performing, that this brutal 2018, we had COVID 2020, March 2020, well, not bad.
Well, this was supposed to be the year of the large caps. So we'll
All I'm
see
saying
if that
is there's safety
cycle
there.
changes.
I would buy gold. Risk reward.
Yeah, so Indian housewife, by the way, has been the
Yeah.
best investor the last 15 years. Sorry, I don't want to be sexist here. Everybody buys
No.
gold. But I'm just saying,
No,
the
I'm
Indian
sure
housewife
you
has to be
don't. You
credited.
buy stock.
I love the way Niraj corrected him very
Yeah.
quickly.
Yeah.
Politically
You know,
incorrect.
Women's Day is approaching.
I think it should be
And so
every
is
day.
Valentine's Day.
It should be every day. But let's get to the stocks of the day, Samina.
Yeah, you've got a bunch, and the top on that list, and I'm very consciously picking good stocks. After Niraj said I seem to be picking up stocks that have been disappointing on earnings, but I will start with LIC. Now, this one, I think, has stolen all our breath away. Fantastic earnings. Margins have improved substantially. Income is up almost 5%. You've also seen profitability going up 49% to come in 9,440 crores versus 6,334 crores. You've got margins that have substantially improved, a sharp improvement in margins to 17.66% versus 14.96%. The good news is, for a change, LIC has managed to retain market share. They own about 58.9% of the market. Historically, in the last few quarters, what we've seen is that they've given up or lost market share to competitors, more often than not to private players. This time around, improvement in margins and retaining market share at that close to 59% of the business. Stock is up 6% yesterday and has done a 33% rally in the month. APE numbers as well, and this is important for the industry, has actually gone up from 16% to 20.1% in the month of Jan. So that is the additions, margins, and that's really the parameter you need to check when you're looking at insurance players. So lots of good news coming in together for the insurance sector. LIC on the helm of it, now trading with a sharp gain in yesterday's trade above 1100. Well, the other one that we can't ignore this morning, relatively smaller, but Newland Pharma. Quarter on quarter, they've outperformed on the earnings front. Revenue was up 46% to come in at 392 crores versus 270 crores. EBITDA came in at 121 crores versus 54 crores. Margins were up at 30% versus a 20% margin that we'd seen in the same quarter last year. Net profits at 82 crores versus 30 odd crores. Well, what you want to keep in mind when you look at those numbers of Newland is that the CMS business has seen very healthy growth, which is led by commercial as well as projects close to commercialization. They've steadily shifted from low margin prime to high margin specialty and CMS management. 360%, those are the kind of returns the counter has done in the recent past, in the last 1 year, and 22% is what we have for the last 3-month period. Aarti Industries, this was a disappointment, but again, no surprises there. The chemical space has been struggling and struggling hard over the last couple of quarters. Revenues come in at 3.8% lower, EBITDA is down 10%. Margins also declined by about 230 basis points to come in at 15% versus 17.3%. And profits also down another 10%. The stock was sulking in the last hour of trade yesterday, so already feeling the nervousness ahead of its earnings. Count declined 5%. Some more selling cannot be ruled out this morning, but there is no end for these guys. I mean, the pain, the destocking, the numbers are just disturbing.
Yeah, the delivery continues to be skittish, but I'm interested. They have a con call today, Samina. They've signed that 4,000 crores contract recently, another 2,000 crores contract. And Grapevine has it that some of these companies, I don't know about Aarti individually, but some of these companies have guided to in conversations and might formally guide when the numbers come out to a pretty healthy FY25. And if the con call commentary therefore is constructive, then this selling today, we'll definitely see selling this morning,
good sort of
but could be
value.
Some people might see it that way.
Fair to say that 1 quarter out is when we would see a little bit of a recovery or a turnaround, because they've now been down in the dumps for nearly 2 years.
Yeah, I think Sumit Nagar also mentioned that in the conversation that we did with him, that in some of these the pain has lasted now for 2 or 3 years. And things may turn around, especially for the specialty chemical companies, not for commodity chemicals, not for agrochemicals, because we've seen what's happened to UPL. But Spec Chem might be a different kettle of fish.
Well, let's see if fundamentally things change in another quarter or so, because that really is the key. But talking about maybe over-promising and under-delivering, I have a couple on my list. I'm going to start with Rail Vikas Nigam. Actually, before that, let's look at PFC. PFC is a good one to look at because this has really been a darling of the market, so to speak. The PSU pack overall, but REC, PFC among them have really been favorites. The stock has run up, some 300% in the last year or so. So the quarter was strong for the state-run company. Income up 20%, net profit up 20%. NIIs were also decent, 16% YOY, 11% Q on Q. A bit of a slide on a quarter-on-quarter basis, but there's also a bit of base effect coming in there. They've declared an interim dividend of 3.5 rupees per share on a record date of Feb 20th. So we'll see if there is some recovery today in PFC. But Rail Vikas Nigam was definitely a disappointing sort of a quarter that we saw. And we'll have to wait. Once again, the con call later this afternoon. So we'll have to wait and see what reasons are being put out by the management for that. They had guided to a softer revenue base, but on revenues, EBITDA, margins, profits, everything is down this quarter. Sales have not really moved. So it's a miss on all counts. And again, a stock that has run up 3x in the last year. Perhaps on that entire tide of railway stocks, but we'll wait and see what happens with them. Biocon is the other one, and Samina spoke about Newland. Interesting. We'll get a more detailed report in a little bit on what's happening with the entire pharma pack. Biocon has some news coming in this morning as well on a new US FDA approval, but overall their quarter is strong, I would say, not bad. Revenues have beaten estimates, up 34%. EBITDA is up 43%. Some of what you're seeing in terms of the profits, because you have a net profit of 753 crores versus loss of 20 crores, is also from other income. There's another income gain of about 456 crores, so you have to keep that in mind. And revenues have also included income from the divestiture of 2 non-core businesses of 350 crores. So a bit of cleaning up, the books in a sense has also led to the numbers. So we'll have to see when you separate the wheat from the chaff what the core business is doing. But Biocon definitely has been one stock on everyone's radar. Niraj?
Yeah, but the core EBITDA performance seems to be strong, so which is one good thing. And I have a fun fact on RVNL. RVNL's market cap is more than the market cap of the entire listed media space. You count network, NDTV, Network 18, Sun TV, Sarekama. Maybe not all, maybe 1 or 2 might be extra, but I'm just saying that, look at that, 58,000 crores of market cap. And if you don't buy RVNL, you can buy the Indian media space. So.
But, Indian media anyway, in terms of how much revenues they make. And
we shouldn't be seeing this, guys.
No. As people who cover what businesses do, that's a different story. RVNL is getting all those railway orders no matter what happens.
Yeah, that's true.
Yeah.
No, but, sorry, so since you bring it up, just before I get to specific stocks, okay, just look at the revenue, RVNL. Is about 20,000 crores. Indian media listed revenue is about 23,000 crores of the 5 stocks that I mentioned. And on PAT, RVNL is about 1,300 crores TTM, if I'm not wrong. Indian media put together is about 1,900 crores.
So they are more profitable.
More profitable.
We aren't working for the railways.
I think it's more profitable to make actual, products or...
No, we're talking about rail also. I think this quarter, all your railway ancillary and railway earnings have been disappointing.
Yeah.
And the stocks have actually run up ahead of themselves.
Over-promised and under-delivered in that sense. Expectations are not high from media at all.
Yeah, I agree completely. No, but I pay cognizance to when Madhu Kela says that, I'm booking profits in railway stocks. I mean,
is that what?
Yeah. So therefore, maybe that's it.
What is he buying?
Well, he spoke about a lot of things. Viewers see that show. Shameless plug here.
Yeah, please do.
Okay, some more stocks. It's been a cement morning of sorts as well, or the cement quarter of sorts, say for one or two. So JK Lakshmi filling in that bill too. Revenues up 9% at 1702 versus 1696. So that's largely in line. But margins improved. 17.9% versus 11.9%. The expectations were about 15. So big beat on the margins and a big jump relative to what they did in the previous quarter. And EBITDA per ton essentially 1,020 rupees versus 756 on a quarter-on-quarter or 638 on a YOY basis. So big uptick there. Cement seems to be the unequivocal buy call from almost everybody who we've spoken to. They are very constructive on cement, so watch out for this one. PAT was up 93%, but anticipated with the kind of EBITDA beat. So watch out for JK Lakshmi. And it will definitely be a mid-cap for a small-cap pharma day. I mean, Newland, Biocon, and then look at what this one has done. Orchid Pharmaceuticals. Revenues up 38%. Margins up 748 basis points at 16% versus 8.5%. The expectation was 13.5%. Net profit up 288% at 29.43 versus 7.58. The estimates were also strong, 26 crores, but they've come in really, really strong. Essentially, operating leverage kicking in for Orchid Pharma, high utilization levels, improved demand for antibiotics and cephalosporins. So all of that aiding, but just the core performance has been strong. And I think one more, Shilpa Medicare.
Great numbers.
Very strong numbers, right?
Yeah.
So pharma seems to be that pocket which has done really, really strongly for itself. Maybe not AstraZeneca, but others have really performed well. Yeah,
and pharma space also one that has been undervalued, always seen as a defensive play, has been plagued to a lot of extent by this US FDA overhang. And when I had the chance to have the conversation with Kiran Mazumdar-Shaw, she talked about how things have changed dramatically in terms of compliances. So maybe we'll see that playing out.
Just one quick stock as well, and this is because we talked about Piccadilly Agro yesterday. United Breweries, another fantastic quarter for United Breweries. Remember, the stock has also been in focus with liquor consumption being allowed in Gift City. So these counters have anyway done well in stock performance, but very strong numbers. Their profits were up. Revenue came in 13% higher. EBITDA was up 90%. Margins have gone up to 8% from about 4.7% that we'd seen in the same quarter last year. Aggressively, spending on expansion and that whole space, really, alcohol as a space. So beer, whiskey, maybe even some of the non-alcoholic beverages have been doing quite well. Another quick one is Torrent Power. Revenues were down, EBITDA was down, but their margins have also declined exceptionally badly. So down about 600 basis points. So Torrent Power on the sell side, United Breweries on good earnings. We should see another reaction there.
A clutch of other mid-caps which have come out with good numbers. PAT expansion, margin expansion. Sharda Motor Industries, PAT up 63%, margins expand.
Wow.
Astra Microwave, PAT up 56%, margins expand some 200-300 basis points. On your screen, viewers, Ramco Cements, PAT up 59%, yet another cement name.
Star Cement yesterday was exceptional.
Star Cement yesterday, JK Lakshmi Cement today, Ramco Cements today. And ITD Cementation, not essentially cement, but in the same space. PAT up 116% with margin expansion. Watch out for these four small caps or mid caps, as the case may be.
Yeah.
They might really, really do well.
So cement infra play continues to be a strong story.
Yes.
Just a couple of more stocks in news. I mean, is it time to stop talking about 197 Communications? I think not. So much news coming in, and including a story that our colleague Vishwanath Nair broke yesterday, that a board member of Paytm Payments Bank, Manju Agarwal, resigned from the company on 1st Feb. The details were made public only yesterday. This follows the RBI making it fairly clear that the action they took against Paytm Payments Bank came after months and years of conversations. So that, in a sense, doesn't make the case very strong for why the RBI should show any kind of kindness or mercy or go softer right now. Z Entertainment is another one that I talk about because a notice yesterday from SEBI that guest experts on their business channel were asked to pay a fine for taking opposing positions to what they were saying on air. So maybe Z is another stock that we'd have to watch today. But many more exciting stories that you're discussing today on the Editor's Cup.
Yeah, well, we talk about opposing forces at play. There is some recent excitement in IT, and should it be justified? So maybe that. And well, Alex, what else? I mean, we're talking about, I wanted to keep my piece hidden maybe.
It's not going to be hidden for very long, Niraj. So let's talk about that, right? Unprecedented is the word that has been used recently to describe the run-up in some of the PSU stocks. And of course, Niraj and Samina as well as Tamanna are talking about some of these stocks even in Indian Open or Indian Market Open. We're going to talk about why, both on fundamental reasons as well as historical reasons, maybe, just maybe, that rally is far from over. On the other side, there were some positive signs in the Indian IT pack on the earnings front in the third quarter, but just maybe there's a few more bumps in the road for them to navigate. At least that's what the Cognizant number seems to suggest. We'll talk about what Cognizant is saying and what to read from the Indian IT pack. But let's start with the PSU banks.
Okay.
Not PSU banks, but the PSU pack.
In fact, we're doing everything but PS public sector banks.
Slip of the tongue.
No problem.
No, because we've had a lot of comments about this, and the Prime Minister himself standing in Parliament and talking about how these companies have performed on the fundamentals. He didn't very much talk about the stock price. He did, of course, but he focused more on the earnings. Why do you suggest that the rally may be far from over?
No, so two things. One, I'm not suggesting the rally may be far from over, but putting numbers into perspective. Sure. But just Alex, as a rewind, who are mere mortals like you and me and Tushar to speak about public sector banks when on a day of the policy, the one index that stood out was public sector banks. Somehow everybody seems to be buying them. But, you know, here's the deal. So we took a look at the PSE ETF, the price to book of the PSE ETF over the last 10 years. And if you see the last 10-year chart, you will feel that the index has veered back to levels which were historical highs, and therefore is this now a peak? But if you look at the last 15 years or 20 years, you will see that the price to book valuation have actually exceeded the current levels as well. So if you take a really long-term view, you might feel that, hey, maybe, just maybe, the rally is not over as yet, because if you pay attention to historical and valuations, and history may not repeat, but it often rhymes.
Yes.
You might feel that, hey, you know, maybe there is more in store. So this is just it's saying that if you look at 10-year history, and so many people say that 10 saal ke level pe aa gaya. But that is not the whole story.
They also say that you can torture the numbers and the statistics to say what you want.
Exactly. So I just did that. I just did that, right? Now, some highlights for companies. This is not exhaustive list, but here's the deal. I mean, BPCL trading at net debt levels of less than 7,000 crores, the lowest in history, according to my mind. It's the highest two-quarter cumulative EBITDA for REC in the longest time, if not the history. So they are doing well. So this is Power Finance now, PSUs, doing very well. We look at defense, the production will scale to all-time high levels of 1.5 trillion rupees in FY24. By the way, just for information, exports have reached about 16,000 crores in FY23, which is a 10x jump from FY17. Defense, largely dominated by PSUs. There are some private players, but largely PSUs. And four, value of the PSU investments in LIC's book. You know, Chinmay, our colleague, is going to do a piece on that later on in the day, today or tomorrow. But what's the uptick that has come into the investment book for LIC by virtue of all the investments that it holds over a 6-month or a 12-month period? Fascinating piece, I'm sure. So there are some companies which have got these fundamentally strong highlights to back the move that has happened. Okay. And then we take a look at the history, Alex, as you were referring to. So, you know, price to book or price to earnings versus a 10-year average, just to understand whether these are completely out of whack or no. Now, you look at some part of these companies, and if you look at price to earnings, what are we pulling up first? Price to book or price to earnings?
I think we should pull up price
to book. Okay, if you look at price to book, in case of BHEL, way over 10-year averages. In some cases like Bharat Petroleum, maybe not so. In case of Bharat Electronics, certainly so. In case of Hindustan Aeronautics, certainly so. So price to book in certain cases looks out of sync completely. Similarly, on a price to earnings basis as well, some of these companies, BHEL, BPCL, HAL, etc., seem completely out of whack. I mean, BHEL, if you look at the price to earnings, 171 times versus a 10-year average of 53 times. I mean, out of whack completely, right? Bharat Petroleum, 62. You don't value BPCL as, price to earnings, but I'm just referring it as a point to make, or a Bharat Electronics, etc. But there are some which are not so expensive as well, right? So look at ONGC, Oil India, or Coal India. Price to book versus 10-year averages, or price to earnings versus 10-year averages. These companies don't look all that expensive also. So within an overheated pocket, there are pockets of strength. And by the way, while power financiers look expensive, I'll just take a minute more. Some of the people are still very constructive on the power financiers as well. So stocks like PFC, REC continue to find favor. Samit Vartak mentioned this. I think Sridhar Shivram probably mentioned this as well. So there are people who are takers for these companies because of the kind of growth that might come in. So that's to be kept in mind. And frankly, while some of these rally is overdone, so you could argue, looking at history, that public sector banks have run their course, because if you look at 1 year, 3 year, 5 year, public sector banks have far outstripped the gains in the private sector banks. So people could argue that maybe there's a turn coming in. The valuations for public sector banks are still maybe at times 1 times book, 1.2 times book. Yeah. So, who's to say what could happen? But within this overheated pocket, and yes, some of the parts of the PSUs are overheated, there are some which fundamentally, based on earnings growth, might still have room to go.
Speaking of earnings growth and speaking of PSUs, LIC, of course, and you discussed this at the start.
Samina spoke about it, yes.
It was phenomenal yesterday, right? 49%.
Yes, and we haven't even gone down to mark to market some of the investments that they have. So just the point, I mean, in some cases you can't reach a conclusion. It's one of those cases, but the conclusion is, Alex, that yes, the space is overheated, but there are some pockets. If you look at history, it's definitely overheated, but history may not be the right indicator of what is in store in the future for some of the PSUs. Because
as it has been pointed out also, the fundamentals are far different than they have been in the past. Okay, so let's quickly shift gears and speak about the IT space as well. I think for a long time we've been trying to gaze into FY25 and see when the bumpy landing for the US would take place. Now we're arguing that perhaps it's not going to be such a bumpy landing, but we're still seeing Cognizant's guidance not very pleasant, Tushar.
Yeah, so what the Indian IT pack has seen over the last 1 week is a push and pull as far as commentary is concerned. So early in the week, we had HSBC coming out with a note saying that, okay, the trends that we are seeing, the outlook is not that bad. It may be good for the top 4 companies. Now, a peer to those top 4 companies comes out with the earnings saying that we are guiding for a negative -2 to +2% growth, with the CEO saying, and I must quote, our guidance range is broader from -2 to +2 because we do not know what we do not know. So that clearly underlines that how hazy that picture is at this point of time. So again, which is why your stocks react. He goes on to say, but our thesis is very simple. We are going to be prepared for a comeback in discretionary. Again, that picture on discretionary is not clear. So if you look at Cognizant numbers, revenues are down for the fourth quarter at 1.7%. Net profit is up 7%. Margins up 190 basis points. So the numbers are okay, but they are still guiding for about -1.8 to 2.2% decline, in 2024. Jan-March is seen at about declining 2.7 to 1.2%.
Sure.
So what these two actually, HSBC and Cognizant, actually agree on is the fact that discretionary spending is still absent. It's not coming back anytime soon.
Got it.
Near term, when it comes in is an unknown, right? So therefore, you're preparing for the best. You're preparing for the best, but you're guiding for the worst.
Yeah. So I guess that HSBC's, I think the sense comes from the fact that these are fundamentally sound companies. So when it does come back, they will be at the forefront of making the most of it. Which is fair.
But I have a question, sorry. Just one quick minute. Q3 IT results, they were disappointing, right?
For India, again, it depends on what you're looking at. If you're looking at the top tier, the situation is, if the situation has not gotten worse, it's okay. because the expectations themselves were not that high from these companies given the seasonal weakness that we see in Q3. So the numbers themselves were not that expectation that was not high. So when a TCS or an Infosys meet these expectations, they're like very happy, So that, at least this is happening. Situation hasn't gotten worse. But what investors should also realize that for the entire year, we are still looking at discretionary spending not coming back. So against that backdrop, how do you sustain your margins that you've actually sustained in a very rough 2023? The second thing to watch out for is how do you convert the large deals into revenue? So that is the
which has not been taking place.
Which has not been taking place. It's not meaningfully reflecting in revenue numbers.
So I guess caution is to be advocated.
It's warranted.
And pay attention to the unknown unknowns, as Cognizant has said. And I think that brings us to the end of this particular edition of the Editor's Cut. Let us know what you think about it in the comment section or on any one of our social media platforms. And do stay tuned. We'll be back on the other side with the F&O action and everything that you need to know in the half an hour before the start of trade. Do stay tuned.
And RBI sticks to its guns, says Paytm failed to take corrective measures and an independent member of the Paytm Bank resigns. Another day, another record close for the S&P 500 touches the 5,000 mark intraday. Japan's Nikkei today hits a fresh 34-year high. And the wait for interest rate cuts gets longer. RBI keeps a tight vigil on inflation and liquidity separately. Dinesh Khara of SBI says he expects rate cuts could take place in the second or third quarter of FY25. An economy at centre stage in the run-up to the 2024 battle, the Modi government tables white paper slams UPA for its failures. And SEBI cracks down on Z business guest experts over unlawful gains. Well, those are the top headlines that we're tracking this morning. A quick check on what trade is looking like on the implied Nifty. Yesterday, remember, was a down day. This morning, expected to be another slight gap down in terms of trade. But Agam is standing by with more on that. Agam, we aren't expecting runaway gains this morning. More than likely, it's going to be flat with a negative bias.
Yeah, that's exactly what we were expecting, Samina. And in fact, that's kind of what we saw towards the second half of the session as well. A lot of consolidation after the RBI monetary policy. While we did see a sharp cut of around 1% on the benchmark, there was sideways movement in the latter half of the session. But we did see a little bit of an increase in open interest as far as index futures go to the tune of nearly 1.5%. But the action as far as the bank Nifty is concerned was a little sharper. So a sharper 1.8% decline on the underlying, and also a near 4% increase in open interest towards what seems like fresh shorts at the moment. And a lot of analysts have been suggesting that, that there is more weakness potentially as far as Bank Nifty is concerned, specifically in the private sector space. Let's move on and talk about how things have panned out in the Nifty. And this is, of course, your open interest distribution. And we now have a lot more accumulation around the 22,000 call, the one with the max OI. On the lower end, we continue to shift between 21,500 and 21,700, at least as far as the max OI inputs concerned. For now, of course, it is 21,500, but this is a new week. So, this is likely to change as well. Let's move on and talk about how things did come through yesterday. And of course, the Nifty was to a certain extent all over the place between 21,500 and above. Of course, we closed somewhere around 21,700. Moving on in terms of stocks. Well, we do have longs in PI Industries, Power Grid and Alchem Laboratories, shorts in Chambal Fertilizers and Britannia. In terms of stocks which saw unwinding in trade, well, we have short covering for Lupin, Trent and Cummins. Trent continues to move from strength to strength, up another 6.5% yesterday, so keep an eye on that one. Of course, we will have a whole host of companies reacting to earnings today as well. That said, what do you do with this data, and how do you address a new trading options expiry week going in? Let's get in an expert. We have Jay Patel of Investmentor Securities, who's joining us on the show. Jay, good morning. Thanks for joining in. What are you doing with the benchmarks now? Are you expecting some consolidation, or, well, would you in fact expect them to take on a direction at the moment?
So good morning, Agam and Samina. So my views are a little different for Nifty and Bank Nifty, because in Nifty we can see Reliance getting a good support, particularly IT companies and PSU banks are giving good support for Nifty. And currently, if we see yesterday, Nifty has bounced back from its 21-day exponential moving average, taking a support at 21,675 zones, and it has bounced back above 21,700. So the support which you had talked about, 21,700 and 500. So definitely we are shifting upwards and downwards toward that trajectory. So 21,500 can be a stop loss or can be a support for a positional trader, which are taking Nifty for a 1 or 2 weeks horizon. So I would suggest to be buy on dip strategy to be used on Nifty, particularly once Nifty enters 21,500 to 600 zones, we can see a good bounce back coming in Nifty. But Bank Nifty on the reverse side, we can see more weakness coming in, particularly after it crosses below 45,000 zone, because currently 44,600 zones is displaying a good support, which is at place at 200 exponential moving average, and we can see more lineup for more weakness lined up for Bank Nifty, particularly the daily chart shows higher lower high lower lows pattern definitely displayed on the chart. So I would suggest private banks could see a drawdown in today's session also. So we can see a weakness coming in for a Bank Nifty, but views are diversified with individual stocks also. My views on the heavyweight Reliance is positive. So I would suggest Bank Nifty to perform well compared to Bank Nifty.
Sure, Jay, can you take us through Piramal Enterprises then? I believe you have strategy there.
Yeah, definitely. So my strategy for buying a put option on Piramal Enterprise which is placed as around 890 strike price. Just a second, so I can pull up. So if we see Piramal Enterprise daily chart, we can see a strong resistance at 200 and 100-day moving average. So we saw a drawdown in yesterday's session. Also, we can see the stock hitting towards 850 zone. So I would suggest buying 890 put option for Piramal Enterprise for the February expiry. The current rate is around 26. My target price would be placed at around 38 to 40 zones, and we can see a stop loss to be kept at 18 zones. I would suggest this strategy can be useful in today's or Monday session, so we can see a target get hitting on today or maybe on a Monday session. The second strategy would be on Reliance. I suggested buying 2,900 call option on Reliance. Particularly, we saw a strong buying coming in Reliance in yesterday's closing session, and we can see the move can follow up in today's trade. Also, we can see the strong resistance coming in around 3,050 zones. So I would say Reliance would be a good strategy on a buying side. So I would buy 2,900 strike price call option with currently this the current market price is around 76 to 78 zones. The target price will be kept at 110, and stop loss we can keep at 55 zones.
Okay, some interesting calls coming in, and sharp vanilla calls and puts being bought in order to take advantage of the sharp moves in their respective stocks. So Piramal Enterprises expecting a down move today and over Monday, and on the other hand, Reliance Industries expected to move up, because of which we are looking to buy calls. Well, those are the views coming in from Jay Patel. Jay, thanks so much for joining us and taking us through your views and giving us a handful of trading ideas. And with that, it's back to you, Tamanna.
Thank you for that, Agam, and thank you, Jay, as well. Let's put our focus and turn our focus completely to stocks that may respond today in trade. And one on the radar is definitely Zomato. A clutch of brokerage reports have maintained a bullish stance, most of them upping their target price as well. Harsh, what are these brokerages, what are these house views that are liking Zomato? Why, and what's the target price they're looking at?
Well, yes, Tamanna, as correctly pointed out by you, numbers looked quite strong for Zomato yesterday itself. Numbers came out before close of trade yesterday. We saw a bit of a spike on the stock before the stock cooled off, before market close. Now, with regard to the 3-4 brokerages we have our hands on, one is HSBC. They've hiked their target price from 150 rupees to 163 rupees. They continue to maintain a buy rating. What they're suggesting is margins have come in better than expected. What they're also seeming to suggest is the gross order value growth for food delivery in Q3 was largely in line with their expectations. The long-term focus on growth and advertising revenues from the Q2C business seem to be playing out well. There's good progress on it, and they're expecting ad revenues to now grow to 6% of GMV, which is gross merchandise value, in 2 to 4 years from now, which will be substantial. Now, they value Zomato on a DCF basis, and they include Blinkit estimates as well, and they've therefore hiked their target price. Quickly moving on to Jefferies, also a buy on Zomato. What they're suggesting is a target price of 205, earlier 190. They are suggesting that GMV growth was strong. EBITDA is sharply ahead on both its businesses. Inline growth in food. Zomato Gold pricing continues to be a drag for them. Quick Commerce posted good numbers according to them, and they've raised their adjusted EBITDA guidance by 4 to 10% as Zomato moves towards profitability. Morgan Stanley also weighed in. They've hiked their target price from 140 to 150, maintains their overweight stance. Food delivery EBITDA rose on the back of contribution margins is what they suggest. They're also suggesting that core business EBITDA was in line with estimates. Lower losses in Quick Commerce was a positive, in fact, a positive surprise for them, and they're expecting margin expansion and top line growth to drive absolute profit. So across the board, we're seeing that brokerages believe that the numbers were stronger than expected, margins better than expected, and profitability in the anvil now.
Harsh, one of the things that you missed in the Jefferies note on Zomato is Dipinder Goyal's release and the highlight that they've done, wherein he says that be paranoid about driving innovation and disruption, or someone else will. It's quite stunning as to what Zomato is doing around innovating and disrupting, isn't it? Harsh, are you there? Okay, I think we lost Harsh, nevertheless. But, guys, amongst other things, a lot of investors who are invested in Zomato say that the quarterly release that they give, it's in a very funky fashion where they talk about all that they have done and what they want to do and a key message. I think that is around, for a lot of people, the highlight of what Zomato's messaging has been ever since they hit those trough levels of about 50, wherein this whole set of stocks were derated completely.
That was months after the IPO. But, the other thing is that Zomato is one of those companies in that group of stocks or in that cohort of stocks which is very focused and clear in its messaging on actually breaking even on EBITDA, that we will be profitable someday. And all of these notes are talking about Q1 FY25 on track.
Paytm was trying to say that somehow they've gotten disrupted by a few
now
things.
Everything can't be
Paytm.
On a softer note,
hit by the Paytm outlook.
Yeah.
Just going back to Zomato on Blinkit, they actually had a Valentine's week kick-off with record-breaking rose and chocolates.
Yeah.
So talk about reinventing the wheel as well, right?
Have you experienced the speed
Valentine's
of Blinkit?
Day?
No, the speed of Blinkit?
Oh, yeah.
Yes.
Oh, yeah.
I'm a user of
truly
Blinkit.
It's insane. So, yeah, maybe something will be working.
So there is, that is Zomato. The stock was up 2.5%. It will, it's the second quarter in a row when they've actually had a really solid set of earnings. Will be one to watch out for in early hours of trade. But along with that will be LIC. We talked about how they've had a great quarter, sharp jump in margins as well. Retained market share, which is a little bit of an aberration, especially after the fact that they've lost market share in the last few quarters. But Harsh, more on LIC with 58% market share, strong margins. Numbers were a clear beat.
Well, absolutely, Samina. You've hit the nail in the head. Much stronger margins than what most analysts on the street were working with. First off, sorry, I lost audio there, but let me quickly move to LIC, try and give context there. You've seen net premium income, which went up by around 5%, of course, on an extremely high base. But they've been able to, the key takeaway here is, as you correctly said, they've been able to maintain their market share. Now, in terms of the way in which margins have evolved, margins, for context, were sub 10% when LIC listed in May of 2022. Now, at that point of time, even double-digit margins was a far cry. They've actually done what they had guided for, which is 15% plus on margins. They've, in fact, beaten that in this quarter by a mile. 20% on VNB margins in this quarter. Of course, we need to understand that better, what metrics have driven margins higher. But one of the key metrics is with regard to non-par AP, which has gone up by 49% year over year. Mind you, non-par largely will contribute to better profitability because it's non-participating in nature. And therefore, the profit on that is slightly higher and therefore contributes to a higher margin. But 20% was something that I don't think any street analyst was really penciling in, and therefore that number is come in extremely strong as per what are the kind of numbers we were working with. Now, with regard to the larger persistency trends, also they've played out very, very stably. You're looking at the 13-month persistency at 78% versus 77.6% a year ago for the 9-month period. So you're seeing that there's a consistent growth over a longer period, which is the 9-month period as well, which is a positive. The 61st month persistency also has largely remained as is, just a 30 bip odd decline. From the 62.7%, it's come to 62.4%, but nothing of major worry which is seen there either. So a lot of factors playing into the hands of LIC. Also, they've declared an interim dividend of 4 rupees a share. The full year dividend last year was 3 rupees. Interim dividend of 4 rupees, definitely a positive step. Also, you are witnessing how overall your profit numbers have gone up. Very, very solid profit number of 9,444 crore, which is a 49% growth year over year. So across the board, the trends seem to be quite strong.
All right, thank you for that, Harsh. LIC might just be the joker in the pack this year. Another stock, a public sector enterprise with relatively minimal public float. We didn't have too many expectations riding on it, but the quarterly numbers have been a positive surprise to say the least. Kush Bohra, founder of KushBohra.com, with us this morning. A very good morning to you, Kush. Let's start with levels on the Nifty, Bank Nifty, before we get to stock-specific action.
Sure. Hi, Tamanna. First, a very good morning. Well, we are seeing a bit of a volatility spike up, but I think, India VIX sort of indicated that, much ahead that, we are going to see this storm in a teacup, if I can call it that, kind of moves. Now, the interesting fact for me, even before I get to the levels, is the fact that if you see the next weekly expiry on the Nifty has a strong put base at 21,800. Now, if in the opening 15-20 minutes that does not sort of go away, if it does not shift lower to 21,600, 21,500, then the market itself is telling you that there is a case for short covering, perhaps today or sometime early next week. So that is one interesting point that we've been tracking since yesterday. In fact, on the whole, the range of 21,600 and 22,100 is what the market is playing in. And given the volatility spikes, the kind of moves that we are seeing, on the perhaps every alternate day, one day up, one day down, not too much of a surprise. So closer to the lower end of the range, we'd be buyers. Just to be safe, we keep our stop loss close to 21,500. And I'm still playing for 22,000 and 22,200 kind of levels on the Nifty.
So you're positive on the 22,200 levels on the Nifty. I'll come to you on the Bank Nifty also in a bit, Kush. But, we spoke before we got to you about LIC and Zomato. Any views there?
Interesting that you asked, because LIC was our call on our advisory service for the last couple of days. It, overshot all the targets. We still maintain a buy on this. The only catch here being that, it's actually gone into a bit of an oversold territory. So now perhaps from a risk reward perspective, buy on dips or buy on declines rather is a much more prudent strategy, purely from a risk reward standpoint. Otherwise, if you see the volumes have spiked up, the momentum is strong. So I don't see a reason why someone should exit quite early on this. Positionally, we are looking at targets of 1,200 and 1,250. And on the downside, perhaps 1,050 is a good level to re-enter into this stock. So that's on LIC. As far as Zomato goes, again, the stock's consolidating, but with a very strong positive bias. Now, let's recall that, the stock had a very stellar run in the last, in the second half of the last year. After that, a consolidatory move with a positive bias, I would take it with, both arms open. Volumes have seen a spike up yesterday. From my perspective, this is still a hold, not a buy just because of the lack of momentum. That's the only reason. Otherwise, it's still very much a hold. I have a positional stop loss at 135 on this one. And on the upside, we're looking at 160 and perhaps even 175 kind of levels in the coming months.
Right, that's LIC and Zomato, but there are a whole bunch of mid-cap pharma names that are going to be in focus on back of pretty solid earnings. Varsha is standing by with more of that. Varsha, Newland was spectacular quarter on quarter. The stock has also ran up quite sharply, but anything else beyond Newland in the pharma pack that looked good?
Yes, Samina. So let's start with Newland. So if you see, the revenue is up 45% and their CMS business saw healthy growth led by commercial as well as projects close to commercialization. Also, the EBITDA margin of 31% is a factor of improved business mix as well as improved operating leverage. Also, they are shifting from low margin products to high margin specialty and CMS segments. So these are key reasons why we see good numbers. Then we have Biocon Limited, where profit did beat estimate, but we need to see that the revenue growth of 34%. Now, this includes income from divestiture of two non-core business assets, which amounts to almost 350 crore. Also, net profit of 750 crore includes other income. Now, the other income gain of 456 crore, mainly from fair valuation of Biocon's holding in Bicara Therapeutics. Then we have Aster DM Healthcare, where revenue was up 16%. Their India business revenue grew 23%, led by expansion of over 750 beds within the past year. Also, EBITDA and profit growth was led by cost optimization and operational efficiencies. Then we have Shilpa Medicare, where though revenue was up only 9%, but if you see margins were 23% versus 11% last year. Now, this is on improved operational efficiencies and cost rationalization and companies' focus on development of niche product. Lastly, we have Orchid Pharma, where revenue growth was 38%, while if you see margins were 16% versus 8% last year. Now, this is due to, if you see the cost of material with respect to revenue, which was 60% last year, came down to 55%.
Okay. Well, interesting what's happening in pharma today. Varsha, just one quick thing. Out of the 3 or 4 or 5 which have done really well and one which has not, which has been the strongest beat, and is there a commentary that the company is given around what could happen in the quarter ahead?
So, Newland, I would say, have given really good numbers, and company is expecting. So, because they are shifting to high margin products, they'll be maintaining this kind of growth.
This kind of growth, higher margin products, and therefore the kind of margin beat. Varsha, thanks so much for putting that into perspective. Newland Labs, some of these companies are very steep in valuations, but if with the margin uptick that has happened in some of them, I mean, and if that is staying true, then well, maybe some of the runs could be justified. I mean, no idea about the valuations of Newland, to be very honest, but just that the margin beat seems to be so strong.
And they've also moved from low margin business to premium, better margin businesses. I think that is the other sort of cue. But yeah, who's to say whether a stock is expensive or not? Sometimes good quality names are available, but available at a massive price valuation. Kush, I would take your stock picks, but very quickly, do you have a word on Newland? Fundamentally, it's an exceptionally good quarter for Newland. Technically, on the stock performance as well, it's done over 300% returns in the year. Going ahead, would you go long on Newland?
Buy on dips, that'll be my strategy, because if I look at it across time frames, what we're seeing is that the stock is stretched at least on the weekly and the monthly charts. And even if on the daily charts you see, there is a bit of a consolidation happening. So for me, the upside from here on positionally is rather limited. So what I would suggest is any dip, closer to, let's say, 6,200 or perhaps even the 20-day moving average, which is close to 6,000, it would be a good entry point. So I'd wait for a dip on this stock before I make any fresh, allotments.
Just one quick thing, because since we were talking about valuations, I just thought I'll open up. The trailing 12 months, Newland Labs has done a profit of about 317 crores, right? And assuming that, even if you assume that this is exactly the kind of performance that they will do, which will make their annual profit to be 317 and not higher, right? The market cap of the company is 8,300 crores. So at 317 crores of PAT, right, it's circa 25 times. Is it egregious? By no stretch of imagination. Something would suggest, therefore, that the stock will duly get rewarded by virtue of the performance that it has had today, because it's not a very expensive stock, which has delivered such a stellar performance on margins. So could be an interesting one on open today.
Okay, so case for a good open.
Very likely. Again, we should get a fundamental guy to recommend this, because we can't recommend stocks and we don't want to get into that business. And but the going seems to be very strong.
And also, I believe Vijay Kedia and Mukul Agarwal, it's their big bet in the pharma place, is Newland Pharma. 5,000% returns.
We'll get a fundamental view on Newland just in a bit. But before we take that break, Kush, let's get your picks for the day.
Sure. A couple of them. The first one is from the F&O space. In the stars, the stock has actually seen quite a bit of rally in the last couple of days and seems unaffected by the kind of market swings or the market vagaries. Some build-up seen for sure. So this is still ripe for a breakout. Even before that occurs, 235, 242 are the levels that I'm looking at on the upside. 224 is where I would place my stop loss. So this is from a very near-term perspective. One other stock from the cash segment is Shriram Pistons. The stocks had a stellar rally and had gone into a bit of a consolidation phase and again resumed its upswing. So from a near-term perspective, 1850, 1880 are the targets that we're looking at. 1750 is where I would place my stop loss. So in the stars and Shriram Pistons.
All right. Shriram Pistons and Indus Tower on Kush Bohra's list. Very short break and we'll be back in time for pre-open. Stay tuned.
Right, back with India Market Open right here on NDTV Profit. And we are in conversation with Kush Bohra. Keep in mind, about a minute away from the markets to kickstart trade, and the implied open is about 30 points lower. So we'll have a start which may not necessarily be the strongest. The question is, can we build on from there? Because these days, the market has, I mean, if you just look at the last 5-day chart, it's just been up one day, down the next. Frankly, it's been an 800-point range right from December 15th till now. The market has not gone anywhere per se on the Nifty. So just that to be kept in mind. But we mentioned that it promises to be a pharma day, and by virtue of the results that have come out, we got the fundamental view. I mean, we got the sense about the fundamentals out there. Kush, on the technicals, any of these pharma names, there is an Orchid Pharma which might have a good start. You mentioned about Newland, which is fine. And there is Biocon, which is in the last few days had a bit of a run and has a bit of a pullback as well. What about the charts for some of the others aside of Newland?
So I was looking at Biocon. We have quite an active track on this one. Again, not a very encouraging setup if you ask me, because the stock's been a lot volatile to one's comfort. But every time there's a spike, there is also supply pressure that comes in. So I wouldn't go long on Biocon just yet. On the other hand, among the three that you mentioned, Orchid Pharma has a rather encouraging setup. The stock's actually seen a bit of a profit booking over the last 4 or 5 sessions, but has also started to rebound from those levels, and it's a healthy sign, because the stock had shot up vertically from 700 to practically those 950 levels. So I think this is a good recovery, and this is a good time to enter into this stock. So Orchid Pharma, I think the opening itself is perhaps close to 1,000 or those levels. So that may not warrant a fresh entry, but yeah, I mean, I wouldn't be surprised to see further upsides on Orchid Pharma. 1,000 was the target I was going to suggest anyway.
Well, no, these are still just 1 minute, not even 1 minute. I think maybe we'll revisit this at 8 a.m. Kush, when the stock settles down. I mean, it may be higher than this also, who knows? But let's wait for the stock to settle before we kind of talk a bit about that. So that's, on some of the pharma stocks. And the other aspect of stocks which could do really well is cement, right? I think the kind of results that have come in for cement has been spectacular, guys.
I think the other sector to keep an eye out is railways, because yesterday in the cabinet meet, an approval has come in for 6 multi-tracking projects across Indian Railways. The outgo is 12,343 crores. It's going to be across 6 states, 18 districts, and completely funded by the Indian Railways, with a completion deadline of 2029 to 2030. So that's, the next 5 years. So even as we've been talking about whether railway capex will still increase or will still continue, you are seeing that definitely coming in. And this specific project is for multi-tracking, which is a congestion easing project. So definitely keep an eye on some of those rail stocks. RVNL perhaps getting beaten down because of very poor results, but we'll have to see how the others are doing, at least in open. Kush, let me come quickly to you on this bunch of stocks. Railways has continued to be in focus one way or the other. Anything that you like on this list and you would still place your bets on?
So we continue to like Texrail. That is one stock that has been on our radar. We've advised a few times. If you see what's happened in the last few sessions, they've actually gone sideways. And again, not a bad thing after the kind of stellar moves that we've seen. So Texrail, taking 20-day moving average support continues to be, one of our, top picks in this space. From the near-term perspective, we could look at 220 and perhaps even, 235 kind of levels on the upside. The other one is Ircon. This stock too has actually gone into a consolidation mode. Similar setup here where it's taking the support at the 20-day moving average. So from a trajectory perspective, I think 245 is the next level that we'll watch for, and beyond that, perhaps 265. So Ircon and Texrail are the 2 stocks that I have on my radar, and I'm still looking for opportunities, in this space. If any further dents do come in, then perhaps even a Jupiter Wagons, once it holds the fault.
Well, those are a few of those rail counters that Kush was mentioning. A quick check on our Newland is also opened up in pre-open. It'll be interesting to see whether the stock reflects the euphoria at the earnings, so not too high, 2.5%. But of course, the likes of Zomato, LIC are going to be movers that we will be tracking today. Along with that, there are a few more earnings on our radar. Anushi is standing by with more on that. Anushi, what do you have?
Right, Samina. So I'll start off with a stronger set first with Ircon International reporting about a 22% increase in its revenue, with its EBITDA seeing about a 29% gain and its net profit inching up to 29% gain. But do note here that the net profit has outpaced the revenue growth because of the higher other income, which has increased about 69% compared to the last year's period. Onto the order book status, the company has reported an order book of about 29,000 crore, which is comparatively lesser than the 32,000 crore it had reported in the previous quarter. Now, next on the list is ITD Cementation, complete beat on expectations over here, with the revenue seeing about a 52% growth and the EBITDA and the net profit almost seeing about 100% growth. Do note here again, here also the other income stood at about 12.3 crore compared to about 0.7 crore of last year. The company has also secured about 1,200 crores and its order book now stands at about 20,800 crores. Now coming on to the weaker set of numbers, we have Torrent Power, which has seen about a 1% decline in its revenues, but it's the EBITDA and the margins which have taken a higher beating with the management accounting that it is due to the reduction in the net gain from trading of LNG and the merchant power sales. Also, another factor is the higher fuel cost compared to the Q3 of last year. Last on the list is RVNL with a poor set of numbers here, completely missing the estimates. Revenue seeing about a 6% decline and EBITDA and margins also seeing about a 9% decline over here, and margins a little marginal dip. Again, this now you have to do note that the stock has delivered about 3x, so definitely we can anticipate some cards of correction here. The management also stated for the FY24 that they are going to see about a marginal growth overall. So we have to keep that on the checklist.
All right, thank you for that, Anushi. In the interim, just let's take a look at what's happening to ITC this morning. And remember that there was a Jefferies downgrade on ITC. In fact, Jefferies downgraded ITC to a hold, reduced its target price to 430. Earlier was 520. It's way below that target price already. It was at 431 yesterday or so at its low, and it's now pre-open already at a 410. The British Tobacco plan to reduce its stake seems to be the overhang. There's also an uncertainty on tobacco taxation over the next 12 months. All of those factors together. We already saw a beating down yesterday, but that continues to deepen. Let's also look quickly at what Zomato is doing pre-open, because remember, a whole set of upgrades on the target price as well for Zomato. They've had a good quarter. HSBC upgraded target price to 150. They're not far off from that. Jefferies' target price is at 205 in fact, and Morgan Stanley has also done 150, where they seem that they will hit pretty quickly. Sunny Agarwal now with us from Sbicap Securities. Sunny, a very good morning to you. Let's get your take on Zomato, LIC and ITC, these three stocks which are going to be on the radar today.
Yeah, good morning and thanks for having me on the show. So first of all, Zomato, I think the company continued to be on trajectory to report a profitable growth. However, the food delivery business is slightly under pressure due to the weak consumer sentiment. But having said that, the Blinkit grocery delivery business has done pretty well in this quarter. Overall, the construct seems to be positive as far as Zomato is concerned. Seems company will start reporting healthy profitability over next 2 years. So I think we are bullish on Zomato, and one can expect a price target of 170 to 180 over the period of next 12 months. Moving on to ITC, again, ITC, we all know the overhang of BAT, one of the largest shareholder. But I think at 400, 410 level, the company is trading now close to a 5 lakh crore market cap, 50,000 crore profit, 25 time price to earning multiple. A decent valuation to be in. Maybe once this deal is stuck, then probably the overhang of supply will get over, and then we will see up more in ITC stock. Till that time, fundamentally anyway, company continue to remain sound. So if somebody is really a long-term investor, he can approach ITC with a gradual deployment of capital. And once that block deal is over, probably we may see up more in the ITC. So again, a decent value bet as far as ITC is concerned. LIC.
Yes, yeah. Yes, go on with LIC.
Yeah, so LIC again have reported a very good set of numbers. So we have seen expansion in a new business margin, which is one of the key metric for any life insurance company. So I think that has expanded by 550 basis point for the December quarter. And at the same time, the gains on the investment book continue to be robust due to the buoyant market condition. Trading at a close to one price to embedded value, I think again a decent risk reward ratio. So I think this can we can again see upward momentum continuing in LIC with a price target of 1,400 to 1,500 rupees over the period of next 12 to 18 months.
Right, Sunny, from all the mid-cap pharma earnings you saw this morning, so from your Newland to Shilpa to Orchid Pharma, Biocon from the large cap space, Lupin yesterday, what do you like the most and what are you constructive on?
Yeah, pharma continue to do well and it's one of the under-owned sector. So I think again our topic here will be Lupin. So Lupin has done reported a very fantastic set of numbers, and it seems that among the large cap this can outperform the market going forward. So Lupin is one of our topic. Shilpa Medicare, again the company has reported a robust set of numbers, so that that business we like. JB Chemical, that is a business we like. FDC we like. Mankind Pharma is a company which we like. Stride Pharma, again they have reported a kind of turnaround quarter. So these are the few businesses. And in addition to that, Cipla, again a very solid set of numbers we have seen coming from Cipla. So Cipla is also on our radar.
BHEL has bagged an order from what I remember seeing on the wires this morning. It has, right?
5,500 crores.
5,500 crores. The stock in pre-open is up 2.5%. Do you think it would make for a quick intraday trade if we do get an opening at 236, 237? Could it still be bought for the day?
So, well, there's a possibility that the stock could perhaps, move higher from there, but I think the risk reward ratio will not be favorable. There's a very strong call base at 240 and 250 as well. So I think there will be some amount of profit booking that will come in if we do hit, the 240 kind of a threshold. So I think with the kind of gap up opening that we are seeing, I don't think there will be a very high risk reward ratio, for the stock for a re-entry, for an intraday perspective at least. So from my side, it's a hold for everyone who's got an existing position can hold on to this one. 232 is where you can place your trailing stop loss and ride the wave.
Okay. Well, the pre-open rates have settled. Wonder what Orchid Pharma is up to, because that was the other one that we should just see. The Nifty is flat at the end of the pre-open session. 14%, by the way. Not just 1,000, eclipsed 1,010. So some of those targets have been taken away quite completely. The other one, just saw a note. Goldman Sachs has raised the target on NTPC to nearly 400. The price yesterday was 332. Is NTPC reacting? Not quite. Still about 332. And some of these power-related entities are looking very strong. Yesterday, also we saw some upticks in the Inox Twins and Power Grid as well because of some fundamental developments. Sunny, quickly, anything in the power space, particularly NTPC, because there's a stiff target upgrade that has come in.
Yeah, Niraj, actually the entire power sector is buzzing with a healthy demand environment. So we are seeing basically demand both on renewable as well as on the fossil fuel side. And we all know that all these large companies, whether it is NTPC, Tata Power, Adani, they are reaping benefit out of both the segment, whether it is renewable and on the thermal side. So again, I think the power sector is in for the long-term play. The way India is pushing manufacturing, Atmanirbhar Bharat, I think the consumption of power by both the industries and consumer will continue to grow over the period of next 5 to 7 years. And the way government has set up a very visionary aspiration to increase the power capacity over the next 5 to 7 years, I think the entire power value chain, whether it is a power generation companies, power transmission companies, all the ancillary companies, whether it is cables or tower companies, they are likely to be the key beneficiary. Again, NTPC, it's a good play to ride on a long-term growth story of the power.
A minute and a quarter left, a minute and 3 quarters left. Kush, Bohra, if I had to ask you, you've given 2 or 3 calls this morning, some stocks that you liked, some which have already hit the targets that you wanted to give. You had to bet on one stock for the day today. Which one would that be?
So I'm looking at the Swan Energy. The stock's actually done rather well for the last couple of sessions, gone into a bit of a consolidation mode. But I think, after a good base formation, the stock's now ready to move higher from here. So I think 685 and 700 are the levels that we should look at on the upside. And 650 to 645 kind of zones are a good support zone. If I can add one quick stock, to this list is Concor. Very strong long build-up seen over the last few sessions. So I think the upside here could continue. 1,000 is the immediate level that I'm looking at on the upside.
Right, Swan Energy and Concord, those are the two calls coming in from Kush. Those are counters he actually likes. 40 seconds to go. Remember, we did see some disappointment on the street post the RBI policy yesterday. The market saw a cut of nearly 1%. And let's see if there is some follow-on buying that comes in today's day of trade. Earnings is going to be the talking point for most part of the day, and what we're really expecting is stocks reacting to that. It'd be interesting to see how PSU banks as well trade in today's session. Remember, despite a disappointment on policy yesterday, PSU banks taking SBI as the lead actually had a pretty pleasant day of trade. SBI pulling through with very, very solid earnings. A bunch of pharma counters in the broader market. Cement is what you're going to see as well. You have a couple of order wins that we're reporting on. Brokerage upgrades on the likes of a Zomato, brokerage downgrades on the likes of an ITC. Could be a few of the movers in today's day of trade, and that's how we open up. It actually looks much better, if I may say, than what the implied Nifty was indicating too. Oh well, not really. It's trading flat, 21,715. We should be holding on to levels of 21,700, and that's going to be important before the markets then again find support at 21,500. Bank Nifty, after yesterday's selling, continues to see some pressure. The pressure coming in largely from private sector lenders. 42 points off on Bank Nifty is what we have. Broader markets moving largely in line with the benchmark. What we've seen in the last few weeks is that the broader markets have actually been outperformers as compared to the benchmark. Small cap index doing just that, up 0.3%, outperforming the Nifty. But mid cap and the Nifty both trading under some pressure. So it's largely flat with a downward bias is what we are picking up on. The breadth of the market's not too bad. The bias is on the upside. Your stock of the morning, no runaway gains, but nevertheless is Power Grid up about 1%. Pharma from the large cap pack is also not looking too bad. So Cipla trades the gain of 1%. Britannia seeing some recovery after a big sell-off yesterday. So remember, FMCG sold off quite sharply in yesterday's day of trade. Some buying emerging on those names in morning trade. ONGC not looking too bad. Tata Consumers doing exactly what Britannia is doing, is finding a near-term bottom for now. RIL, IT look pretty good. Auto also not doing too badly. UPL seeing some bit of marginal buying activity. On the sell side, interesting, it's actually Bharti that's leading the losses down about 1.5%. Mixed bag for auto, so Maruti, M&M are trading weaker. Some of your private sector banks still looking weak. Infi is also not looking too great in today's day of trade. Apollo Hospital reported numbers that weren't too bad, but the markets don't seem so pleased, at least in early trade. ITC, if I can quickly find that on the screen. There you go. That's ITC after a 5% cut yesterday, still trades flat. So no excitement, Tamanna. It's a quietish morning. FMCG is seeing some buying, but that's largely because of a fall that we saw in yesterday's day of trade.
Absolutely. And I have to say, ITC is not doing too badly, all things considered. You have that Jefferies downgrade. They've already seen quite a bit of cut yesterday. But I'm talking about some of the stocks that have been on our radar. Let's start with Zomato. And Zomato is definitely an interesting story. Now, Q3 will have typical tailwinds for Zomato. It's a quarter of holiday celebrations, etc. People tend to order more. The Blinkit business is catching up, and a clutch of house views, a group of house views have been very positive on Zomato. Target prices are varying from 150 to 205. So an MS, for example, 150, almost there, frankly, and 205 for a Jefferies. So Zomato one on the radar this morning, definitely. Let's talk about PFC and RVNL. Again, both on numbers. PFC, on the face of it, had good numbers. Year on year, quarterly, there was some bit of compression on profitability on the quarter, but that was also because of base effect. The street hasn't taken too well to PFC at all. Remember, it's a stock which has run up over 300% in the last 1 year. That stock down 5.5%. RVNL, opened nearly 9% down in the pre-open trade at least. So at 5.5%, it's definitely a disappointing Q3. We'll also take a look at what Jupiter Wagons or a Texmaco and all of that is doing, because railways is going to be in focus. But with RVNL, the story is definitely in the quarterly numbers. Biocon, the other one that we should look at, so-so. Nothing exciting happening there. The quarterly numbers were not half bad. A lot of other income coming into the revenues and the profits. But there is a pact with Sandoz as well, completely flat on Biocon. CG Power is just one that I would pick up. It's in a JV pact with a Thai company called Stars Microelectronics, and they're going to be setting up outsourced semiconductor assembly and testing facilities in India. Stock about 0.5% down. So nothing exciting. This is really a TGIF kind of mood that we're seeing today, Niraj, with not too much happening.
Yeah, but a lot of individual stocks. Tamanna, I'm sure we marked JK Lakshmi Cement on results. That stock is up 7%, is the top gainer on the BSE 500 and hence becomes important. LIC, not just today's move 6%. Can we pull up this week's move if we can? Because I think just look at LIC and what it has done in the last 10 days, last 1 month. It's been spectacular what LIC has done. 1 month ago, maybe it was less than 1,000. So it's actually had a really strong move. Zomato, of course, is up about 3.5%, touching 150. And Samina had spoken about UBL. That stock is up about 2.5% too. I want to see if some of the result boys have done well before we go to our guests. So Sharda Motors, when the PAT was up 63%, wonder if that stock is active, 3%. Astra Microwave, 56% jump in PAT and margins expanded quite meaningfully. Actually, it's down in trade. Ramco Cements, though, I reckon, by virtue of what it has done, in line with JK Lakshmi as well, wherein cement stocks, Ramco too is down about 6%. ITD Cementation, 116% jump in PAT and margins expanded. That stock up about 5%. So mixed bag of sorts reaction. And two stocks, we spoke about BHEL, that started off well. Dynamatic Tech got a large order from Airbus yesterday. Some agencies maybe reported it too, but the official declaration came in post-market hours and the stock is up another 3.5% at 7,600. Some of these stocks have done really, really well.
Niraj, you mentioned LIC, but LIC along with its has taken its peers up too. So you look at GIC, of course, not looking too great this morning, but you are seeing a little bit of buying that's emerging. GSC slightly low, but the New India Assurance has also had a pleasant start this morning. So, and this all, what you're seeing on the screen is coming in after aggressive buying that the insurance pack has seen over the last couple of days. Another quick word, Electra, I think you track that quite closely, having a pretty solid morning, 6% up on pretty good volumes as well. So, expensive aside, some of these counters are just not taking a break.
This is not expensive. This is egregiously expensive, I must say. At best, they would do 100 crores of PAT FY24. Let's say they would double of PAT in FY25. The stock is at a market cap, if I'm not wrong, must be 20,000 crores or thereabouts. It is cheaper. It is phenomenally expensive. Let me just quickly get that market cap before we move on. Yeah. Sorry, 16,000 crores. It's at 80 times FY25 earnings if FY25 earnings double from FY24. Whoa. So this is not cheap.
Just a couple of more that we should talk about. Yes Bank continues its spree. And day after day that you're seeing that. So Yes Bank doing pretty well today as well. Paytm is the other one, 6.5% down. So whatever, upswing we were seeing from very low levels seems to be covered up. Let's quickly take a view from Sunny Agarwal and Kush Bohra. They're with us. First take on the market open that we're seeing. Sunny, let me come to you first. It's looking like sideways trade today and a little bit of trepidation. Perhaps not too many big bets. What's your take on how you would play a market like this? And what sectors and stocks would you focus on? Sunny, that's for you. Okay. Sunny's frozen there. We'll try and get him back on. Kush, let's start with you. We never ended up getting a Bank Nifty take pre-market. What's it looking like? I mean, relatively not doing too badly, frankly, after a bit of a hit last few sessions. What would you reckon on the Bank Nifty?
So here, the 200-day moving average support is acting up very clearly. I won't be surprised to see it slip below that, just for a bit and then perhaps recover again. Although at the moment it does seem to be, doing well for itself, recovering right from the word go. So here the risk reward ratio is favorable. We've seen a bit of short buildup, and the PCR also, is indicating that, it's closer to the oversold territories. So if someone does want to go long positionally, I think 44,600 is a good stop loss to hold. And these we're talking about cash levels. And then on the way up, we're looking at 45,500 and 45,800 as the targets. But bear in mind, this is from purely a short covering perspective. We are not seeing any kind of trend reversals on this. If I can just quickly get a word in on the Nifty, the first comments that I made was around the 21,800 put, having a strong put base, for the weekly expiry, even when the closing for the Nifty was close to 21,700. That seems to be playing up, and now we're seeing some additions at the 21,700 put also, and hence a bit of a recovery. Again, not out of the woods yet, but I will watch this data very closely as the day progresses to see if there is further addition on this. That will indicate that the market could at least consolidate near this 21,800 kind of zone, give or take 100 points, and not slip further. So I'm looking at this options data very closely.
That you've spotted on market opening, any new trades that have caught your attention in the last 5 minutes?
Samina, we discussed 4 stock.
We're getting greedy, Kush. We're getting greedy. Let's do a check on that actually while we're at Swan, Energy, Concord were 2 of the calls that you gave us just before we went into trade.
And Shriram Pistons
and
was the third
Shriram Pistons. That, of course, let's take a look. If you can pull those 3 up, that'd be great. But while we try and do that, Kush, there you go. You've got Swan that's about 1.5%, so it's not a bad start for this one. Concord trades flat, and Shriram Piston as well. If you can have that, would be useful. Marginally higher. So I guess there is still an entry and opportunity if traders are looking to pick some of these counters up this morning. Well, Kush, we've seen some recovery in FMCG stocks after a big fall that stocks like Britannia, Nestle, Tata Consumer, led by ITC, of course, it sold off 5% in trade on those concerns of BAT, powering their stake. How would you play any of these FMCG names for a pullback?
Sadly, no, Samina, because when I look at the structure for some of these, at best what we are seeing is what we call a dead cat bounce. Other than that, there isn't any meaningful recovery. There were hopes, pinned on the budget. Wasn't much there for these stocks, and after that also they've sold off quite sharply. So some of these names are an avoid for me. And I say this from a purely trading perspective, from a near-term perspective. Plus, then there are a lot of these sectors which have been doing well. So if I were to pick any of the sectors, I would rather go with the ones that have momentum going for them, rather than the ones that are perhaps attempting a rebound, if at all. So most of these FMCG names I would avoid for now.
Okay, well, so that's some views as well, and some moves that have happened on stocks. Sunny Agarwal, Kush, Bohra, many thanks for joining in today and giving us your perspectives. Really appreciate your time this morning. Must say, some stocks have flown, some stocks are lying under the radar, but that's normal for almost any given day. Close to Friday, the indices are as flat can be. We take a quick break, come back and talk about numbers. 2 companies join us on numbers. Rishi, Sanghvi or Sanghvi Movers to talk about Q3, followed by Apollo Hospitals.